Takes it. Okay, it's working. Hi, I'm here today at our 53rd and Lindale Edina Realty office with our mortgage specialist, Amy Loftus, and we're just going to talk about what a buyer should know in the spring market. So traditionally, we've kind of always said spring market starts day after the Super Bowl. So we're here now. Probably a lot of people are starting to think about buying or selling this year, so hopefully we can give some important info here. Rates.
Very important to know about what's happening with rates today. In the last month, we've seen rates move a little bit higher. We were about 4.25%. Now we're seeing about 4.5% on rates. What we've seen is the stock market has not been performing very well over the last week and two. Typically what that might do is help boost mortgage bonds and lower rates. However, because the economy has also been reporting such great numbers lately, that also drives interest rates up. So that economic movement forward, even in a stock market downward motion, we're still seeing upward pressure on rates. And not expecting that to continue at a real rapid trend, but it is expected that we're going to see that throughout the year, that rates are going to go up a little bit.
So what does that mean if so 0.25%? For most people, that doesn't seem like a lot, right?
Right. It actually does equate to about 2.5% in buying power. Typically, the chart we look at is if interest rates move 1% in interest, a buyer is going to lose about 11% of their buying power. So somebody looking at a $300,000 house at a 4% interest rate today is going to end up looking at about a $266,000 house at 5% for the same mortgage payment. So getting ahead of the interest rate and getting ahead of those increases is going to help a buyer preserve their buying power for the house that they're looking at and not have to deal with too much of an increase in their mortgage payment for qualifying as well.
Yeah, whenever you throw out those numbers, I'm always surprised how much it actually, these small incremental interest rates do mean. But of course, still historically low.
Yes, still historically low. When I started in the market many years ago, it was the first time we were actually in a single-digit interest rate market where we had actually come into under 10 into 9%. So being in a 4% anything market is still great interest rates and really does help buyers maximize their buying power with the rates that we have today.
So if someone's thinking about buying this spring or even into the summer, what do they need to know? When should they think about starting the pre-approval process?
Great question. I always say that there's no time like the present in order to get the process started. A lot of buyers want to know what their credit looks like and they want to know what their numbers look like, and it's really important to plan that ahead of time and to know what it's going to cost down payment and closing cost wise. What kind of cash are you going to need? Because maybe you need a couple of months to save up or a couple of months to maybe plan to what that new house payment is going to feel like. Maybe they just need something they want to touch on their credit and fix up before they actually become truly in the market. So there's a lot of things we can do to prepare a buyer for that future purchase, whether it's 2 months or 6 months down the road, to take that deep dive and get them ready for that process. So there's really no time that's too soon to start the process and take that look and make sure that they're prepared and educated to getting into the market.
Yes. I think that a lot of people are a little bit afraid to kind of see what lies there, but whatever it is, you're going to have to deal with it at some point. So
Yes.
It's better to figure out what it is, and especially with closing costs. I think a lot of times, especially first-time buyers, don't really know what are closing costs, how much are closing costs, and so they might not be anticipating they need as much as they do.
And it can run thousands of dollars on top of a down payment. And the best thing to do is to know those numbers, how they can work with that if the seller can pay costs for them, or if there's first-time homebuyer options available for them to get assistance in those down payments as well. So again, that being prepared and knowing all the options and taking those steps. I think the scariest part is actually not knowing And I have many clients that when they leave, they say, that wasn't scary, that was great. They're well informed and they just feel wonderful walking out because they have a game plan. And having that information is so much more powerful than not knowing.
And then, so recently I've seen a little bit of this myself, some friends who maybe went to get pre-approved. They didn't necessarily like the service they were given, the communication wasn't what they wanted, or the rate wasn't what they thought it was going to be, or what maybe they could get with their credit score. So I think something that's really interesting that you talk about is if they have their credit pulled and then they want to go somewhere else and kind of, see what different rates, fees, or just a different person looks like.
Yep. So definitely doing shopping for your mortgage is really important. You want to make sure that you've been given the best options, the best rates, the best programs, and also work with somebody that you like, that you feel really gives you a good education on where you're at, the process, and everything going forward. As far as having your credit pulled, the credit bureaus actually allow you to shop for a mortgage and not have it affect your credit. So you could apply at a couple different mortgage companies within a 45-day window. And the first time you have your credit pulled, it will stick to your credit as a hard pull to your credit. But then those subsequent applications that you make don't continue to count against you. So it's really important that if you're going to be doing that shopping and looking at multiple lenders, to do that in a shorter period of time so that you're not having any negative effect on your credit for doing that shopping and getting your education done early.
And what happens if they get a second opinion with you, Amy?
If the borrowers have already been somewhere else and they want to come get a second opinion, we do a normal application, we pull credit, check everything, and we are doing a promotion where they're getting a $100 gift card to Target for giving us the opportunity to take that second look and give them a second opinion. And it's a great opportunity for them to get that education. They can do the second opinion, get the $100 gift card. They can confirm that the lender that they're already using is their best option, best rate, best program, or they can find something better. So it's a win-win situation for them because it doesn't cost anything to get pre-approved. There's no obligation to that pre-approval, and they get to go shopping at Target.
And that's a win for everybody.
That's a win for everybody.
You can't get out of there without spending $100.
Exactly. So yeah, you just paid for one part of your shopping trip.
Is there anything else you think that you've seen that you think buyers should know going into this very competitive market that we have right now?
Yeah. Well, it's just the things that we're looking for any buyer is going to be, the credit profile, income, assets, and a lot of buyers think that they have to have this 20% down payment. And that just isn't the case these days. We have a lot of programs that allow 3% down, 5% down, and we have down payment assistance programs for a lot of first-time home buyers depending upon the market that they're buying in and what their income level is. So this concept that they have to save and save and save and save and they're never going to get to that point where they want to be a buyer just isn't a realistic number anymore. There are a lot of programs available. We look at FHA, we look at conventional and VA financing. All of them have first-time home buyer down payment assistance availability. And the nice thing with the conventional loan is that we have that 3% down option now for a lot of buyers, which puts them into a conventional loan versus having to go with that FHA financing. So the FHA loan is sometimes not viewed as the best offer for some buyers going into a seller in an offer. So putting them into and working through to make sure that they can maybe go conventional is a great option for them in a market where it's really a seller's market and they might be in a multiple offer situation, is getting that conventional piece put together and making sure that they've explored those options as well. And again, they can do first-time home buyer money with those even at 3% down. So
Yeah,
it's a great.
With Minnesota housing, some of my clients have gotten a house for as little as $1,000.
$1,000 is the mandatory minimum requirement for buyers. And a lot of those buyers using that program are getting in for $1,000.
Depending on the house prices, which
Yep.
are going up a little bit, but I still see
bit,
people getting in for that $1,000. So.
Yes. Based upon the income, there's a couple different programs that are phenomenal that those buyers are really making and taking advantage of, which is a great way to go.
Awesome. Well, if you guys want to talk to Amy, she has a very convenient website, loansbyamy.com, and there they can see your info or...
Yep, you can email me directly from the website. You can do an online application. You can just do some mortgage research, check some calculators, all kinds of great information on that website. And then it'll give you direct access to me as well.
Yeah, and if you want to connect with me, you can send me a personal message on Facebook or call or text at 612-729-7239.